Audio morning brief of the U.S. stock market, 7:38 a.m. Eastern Time, December 7th. I'm Rich Paz for Critical Point. Later this morning, I will produce the weekly update, and we'll probably split it and do a separate one on the fundamentals and whatever else I'm looking at. And then I'll probably see if I can get caught up and do the monthly update as well. All right. For the market today, I was pleased yesterday with the market popping higher. And the model, the very fast intraday stuff said, yes, it should pop higher. And we got some news to help do that with the expected jobs report to be around 103,000 by ADP. Now, of course, they're not accurate at all, nor is anybody else. But people like to use them. They're saying somebody's got to try to call this. And so they just go with it. And it made them think a little happy-dappy that the economy is slowing down here and the Federal Reserve should be over and done with raising rates. However, as the day proceeded, the model did say, well, it still should have topped for level 4. It was just a last-minute pop, but it came down more than I wanted. And this morning, the model is saying a level 4 bottom is due sometime today. The market is likely to be up tomorrow. And since the jobs report comes out at 8:30, if it's going to be up, the model is looking like it should be up for at least a little while during the day session. This implies that the jobs report could be friendly, bullish for the stock market, or if it's not, we're going to get over it and somebody's going to buy something later in the day, and that level 4 can extend into Sunday night for the futures and maybe even Monday for futures and cash. And so it just sends a message that I think the downside is limited and that the market is at least moving sideways into next week's data, Tuesday and Wednesday with the Federal Reserve and an inflation report. Still waiting on that, in other words. But I just can't rule out some slipperiness here and fuzziness and mud and whatever, and they bring it down. If they're going to take it down, since they did fill most of a gap when they bounced it yesterday, and they created another gap, and they brought it down, filled that, but they just kept on selling. We do have to consider that if it can't respect the bed of support around 45.40, then it may have to visit 45.30 to 45.20. And I don't think it should do any more than that. Now, I won't like to see it that low because it's saying we got problems with these level 3 trends when the market may want to go down into next week's data reports in the Federal Reserve. And it's just taking longer. It's combining multiple level 3s since the bottom on October 27th, and it's still just digesting that huge, gigantic, fast move, okay? Consolidating. Ultimately, when we zoom out, however, even if it goes lower in the next week, even though it won't do what we want to see short term, it won't destroy the intermediate picture that suggests higher later in the month, maybe even into January, and that there is a chance for a Santa Claus rally. And I have to put it down gigantic amounts to say, and even then the models say, but it's going to rebound anyways. But what it would do is rob us from additional upside if they put it down a huge amount. If they don't put it down much, there's a chance this market makes a new high for the year going into the end of the year. It may only be minor. I'm not forecasting a gigantic move. That is on the table, but it's anywhere from a small move to a gigantic move, and anywhere's in between. It's basically just pointing the direction and the importance of it and saying there ought to be additional buying here. There's no serious reason to bet on the downside. If they bet on the downside, they're just playing games of where there's too much money in the hands of a few people who are determined the world is coming to an end. And they've been wrong since October of 2022. And they've been a nuisance to most of the investors, specifically long-term investors, because I don't buy into the idea this market is of high-priced or overvalued or anything like that. All right, so at any rate, we're going to give the bulls a chance here, looking out into Friday to Monday. And I really like the overnight bottom in the futures. It's oversold, and it's meeting some of the minimum requirements, but we're not quite there. So I'm a little concerned, even though they bounced a little overnight, that there's still got to be some selling this morning. And maybe it takes all day, but it's looking like the market, it went down yesterday and was serious about it, but like it's already over it. It's like somebody just had a slug of selling to do and they're gone. And I may be wrong on this, but it just looks like later today the market ought to be moving higher. So I think a level 4 bottom today, and I favor early rather than late, but I may be wrong on that, and it's late, and I may be wrong that it's going to be a down day. And I don't doubt there's going to be sell stops near recent daily lows that can get triggered, and they may be gunning for them, and traders have always looked for things like that, and these computers look for things like that better than ever. But it still looks silly to be bearish here, in my opinion, okay? And I'm trying to be humble about that and not be one of these people that just likes to blast people and then they find out they're wrong and blah, blah, blah. I think this is really a bullish structure into next year and for next year. And we just got to go through some of this sloppiness noise right now. But it's just not adding up that there's that much downside, okay? Now, the interest rates, of course, are still a bit of an impact. But the interesting thing is the model wants a level 4 top in interest rates today, and therefore a level 4 bottom in bond prices, and is suggesting the level 3 trend is not complete, that rates ought to go down a bit longer, maybe even into next week, and bonds can go higher, and maybe even to next week. But at the same time, the amount of decline in interest rates and rally of bonds might be a bit overdone. So even though we might have the direction right, we may learn it really can't move much farther than it's already done. And it is possible they're going to put rates up some next week as they prepare for the Fed Reserve. But I don't know if they need to do that today into tomorrow for the jobs report. I don't think they want to. I think the bond market is telling us the economy has really cooled off. I'm hearing some people who have been nervous about betting on the downside of inflation now think inflation's just going to crash, okay? There's some things that are just unbelievably low priced in the stores and whatnot, okay? So at any rate, as I look at this, I don't like the day-to-day structure here of the stock market as of yesterday. It makes me nervous. They want to put it below the November 30 low, and if so, the 100-day moving average, I believe that's 100-day, 44.21, yes, that's high enough now, close enough to the market, or the market's close enough to that. Even though it's trending higher and acting bullish, the market could snap down to that 44.20 level, or 45.20 level, and then bounce. And so I'm concerned that it violates that last level 3 bottom before level 3 bottom is due, and that means more downside. And yet, if we panic sell, if you're a short-term trader, very short-term trader, I'm concerned what will happen is they know when to put it down and give us this bearish signal, and it doesn't work. They flip right around, buy it, and actually try to trap those who are selling they really want to buy in the end. And I think, again, it's just this fuzziness of they feel like they got to do something instead of sit still, that they think they're preparing for that report tomorrow, when really they should just sit still. There's no reason to do anything on the downside until they get the report. And it's looking increasingly like the report's going to be okay, but I don't think we can convince some of these people. They're determined they're going to bet on the downside. So they've given us some problems for this specific level 3 trend that ought to be higher in the next week, and it may still be, but they're giving us some issues right now. But I think this is probably very, very short term, and it's just a matter of how many people want to ride it out versus how many people say, well, I guess I'll sell some anyways, and maybe it can start over, right? How concerned do they want to be about the jobs report, and for that matter, what's going on next week? So at any rate, for the moment, until it violates that November 30 low, which on the futures is 44.75, and I think it was 45.37 or something like that in the cash market. 5-day average is a headwind where the market can bump its head, but the best forecast is I'm looking at the daily chart and comparing to model notes and forecasts. This market ought to be higher tomorrow. It's due to bounce tomorrow and may bounce into Monday. And it just tells me the jobs report at 8:30 tomorrow might not be bearish enough, might only be neutral, and it might even be bullish for the stock market. And even if it's neutral to bearish, the stock market will likely want to rally some anyways, I believe, as they continue to try to prepare and work on next week's data. And we still get these day-to-day waves of buying and selling. Now, I will say the daily indicator for the futures is almost oversold here too, and it's trying for a positive turnaround today already. I just think it's a little bit early for it to start turning up. The cash indicator was a little bit bearish acting yesterday. It kind of bothers me that's... So we need trade, I think, back above yesterday's high at 4590.68. And I think we can then revisit those targets of 46.30 to 46.53, where on the downside we have anywhere from yesterday's low on down to about 45.21 or so for potential support and maybe near-term downside targets for some of these bears. But again, if we can take out yesterday's high on the cash S&P 500, I think we're back on to a little bit of bullish structure. And if we can just survive now into next week, then I think after we get the Fed Reserve out of the way, get the inflation report out of the way, I think you're going to see them bullish right into Christmas, if not into the start of next year. All right, that's the morning brief. Sorry it was taking so long. I should have kept it shorter than that, especially when I'm going to do the weekly update in a few minutes here. Have a great day. Past results and on the Saturn Ticket of Future results. Thank you.